Hey everyone, and welcome back to the channel. Today, we're diving into the world of investing, specifically with a platform many of you might be curious about, Wealthsimple. Now, let's face it, investing can be intimidating. You hear stories of people striking it rich, but also tales of fortunes lost. So, the big question is, can you actually lose money on Wealthsimple? The short answer? Yes. But before you hit that unsubscribe button, there's more to the story. Let's unpack why you might see your Wealthsimple balance drop and how to navigate the exciting, but sometimes bumpy, world of investing. First things first, Wealthsimple is a platform. It's like the fancy new mall where all the investment options hang out. You can choose from a variety of things, from robo-advisor portfolios to self-directed investing in individual stocks. The key thing to remember is that what you invest in directly affects the risk you take on. Think of it like this: imagine investing in cozy socks. They're reliable, maybe a little boring, but they'll keep your feet warm. Now, compare that to investing in the latest tech startup with a revolutionary new, well, let's just say it's a very interesting product. The startup has the potential for explosive growth, but also a higher chance of going bust. This is the risk-reward trade-off. Cozy socks, representing low-risk investments, might not make you a millionaire, but they're unlikely to leave you barefoot either. The tech startup, representing high-risk investments, could be your ticket to early retirement, but there's a chance you end up with nothing but cold feet. Wealthsimple offers a range of investment options, some with a higher risk profile than others. Their robo-advisor portfolios, for example, are designed to be more conservative, spreading your money across different assets to minimize risk. However, if you choose to self-direct and invest in individual stocks or cryptocurrency, you're taking on more risk. The value of those investments can fluctuate wildly, and there's always the possibility you could lose money. Here's another factor to consider: market downturns. The stock market isn't a one-way ticket to riches. It has its ups and downs, and when the market goes down, the value of your investments can go down with it. This doesn't necessarily mean you've lost money permanently, but it can be unsettling to see your account balance shrink. The key here is to have a long-term perspective. Historically, the stock market has trended upwards over time. So, if you stay invested and ride out the dips, there's a good chance your portfolio will recover and eventually grow. Let's talk about some ways to manage risk on Wealthsimple. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes like stocks, bonds, and real estate. This way, if one sector takes a hit, the others can help balance it out. Invest for the long haul. Don't get spooked by short-term market fluctuations. If you have a long-term investment horizon, you're more likely to weather the storms and see your portfolio grow. Know your risk tolerance. Be honest with yourself about how much risk you're comfortable with. Wealthsimple offers tools and resources to help you determine your risk profile and choose investments that align with your goals. Remember, investing is a marathon, not a sprint. There will be ups and downs, and yes, there's always the possibility of losing money. But by understanding the risks involved, making informed decisions, and having a long-term plan, you can increase your chances of success on Wealthsimple or any other investment platform. So, is Wealthsimple safe? Well, the platform itself is secure, with your investments held by a custodian that protects them in case of bankruptcy. But the safety of your actual money depends on the choices you make. By following some smart investing strategies and managing risk effectively, you can make Wealthsimple a valuable tool on your path to financial goals. With that said, thanks for watching, and until next time, happy investing.